Good afternoon, everyone. This is going to be a quick video after the FOMC volatility on where I think the S&P is likely to go next here. Starting first at the beginning, I have our Feb to March 2020 swing high to swing low retracement drawn here. For a good chunk of time here, price has been trading in between that 1618 and that 200% retracement from that same swing. If I tell you exactly how long, this is where we breached that 1618 mark. And as of today, it's been about 382 days or 266 bars. So in short, a good deal of time that price has been trading inside of these two ranges. Now, as of today's activity, if I zoom in here, price bounced into that 1618 recently, and today we have the edge signal confirmation. This is our oversold indication right here, telling us that we think we're likely to move away from this region. So the question is, are we actually likely to do that? Or is this a false signal and price is going to come crashing down tomorrow? Well, for that, there's really one key level that I'm looking at, and that's the 4304 mark. If I draw a price level at 4304, that's slightly above that candle. Our previous highs have been at 43050. So if we can trade into that 4304 and better yet close above it, I think that opens us up for more upside activity and for this to act more as a double bottom sort of idea here. The last time price action traded into that 1618 and we had the two edge signal confirmations, price then made a move back up towards that 200% mark. Now, one thing to be cautious of is we hit that 200% and then we failed from that point, now falling back into the 1618. What that means is this is now our lower high, and one thing we can do is use our trendline tool here and connect from our high to our lower high there, extend this out to the right to give us a general idea of where we think price is likely to really stall around or maybe even fail around, and that's near that 4450 to 4500 mark, depending on what price action looks like when we hit that trend line. But that's our upside targets. It would also make sense that lines up with previous resistance right there. And that all happens only if we can break above 4304. If instead we can't break above that, we see this level continue to act as resistance, we fall back over, and then to the downside, we have really our next levels or our next Fibonacci level near that 3730 mark. That's of course quite a bit more downside activity, and we would need to break below our previous support for that level to now open up as a new downside target. So I think the upside here is a little bit more likely based off of today's close. And if I extend this line out to the left here as well, you can see how 4304, really that 4300 price point, has been a key area, at least while we've been trading inside of this 1618 and 200% range. It's acted as support here, 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 a little bit of chop around that level right here. One more time previous to that first level I drew as well. So 4300s has been a key place where we've seen resistance. If we can break above that, I think that's opening us up here for more shorter term upside and an overall downtrend, at least as of right now. So I hope this helps to share some ideas. Again, coming back into something like the 1 minute time frame chart, you can use our volatility models to take advantage of those moves, but even with today's FOMC volatility here, you can see how price breaks well outside of our upside models very quickly here. This is to say the volatility we saw after FOMC, the bullish strength that we saw was very much real, breaking outside of even our most conservative volatility models in that 11 to 12 p.m. Pacific hour, and then continuing to march in that subsequent hour. So a good deal of strength here, and that strength is what we're looking to translate near that 4304 mark. If we break above it, that opens us up for a little bit more upside with some new resistance areas, with our next resistance really near that 4350 to 4360 mark, and then we have our upside targets based off of that trend line. I hope you found today's video to be useful. If you haven't already, make sure to check out that Fibonacci Trading course. It's completely free, it's 4 parts, and it goes through how you can draw retracement levels like these. And you can also start to do things like draw clusters on shorter time frames to try and play these overall moves into both the upside and the downside levels. Take care everyone, good luck trading, and we'll see you in the next update.